Placing your money in managed investments comes with a range of benefits, which might not be so apparent. So let's run through some of the main ones. Right, starting with the benefits. The first is that professional fund managers have access to a range of investments that may often be out of reach for the average investor like yourself. A good example could be a large commercial property that's worth, say, $50 million, which is not necessarily cheap. Because fund managers can raise money from many individuals, they can use the fund's total assets to invest in the commercial property. Another example relates to regional exposure. So let's say the Brazilian government issues new bonds. An average investor sitting in Australia will likely find it difficult to buy these bonds. A fund manager, on the other hand, will have much easier access to such an investment through their extensive networks. Benefit number 2 is cost. Every time you invest in something, there will almost always be some associated cost, like a fee to a stockbroker. So let's say you want to buy shares in 25 companies, and the fee for each trade is $20. This is going to cost you $500 up front. And if you wanted to sell all of those shares, it will cost you another $500. So again, this is not cheap. Now, fund managers, on the other hand, can provide large portfolios with shares in as many as 500 companies and at a much lower average cost. This is again because fund managers have an extensive network in the financial services industry, which helps to reduce the brokerage fees that they pay. So these fees will be incorporated in the annual fee that you pay to the fund manager. Benefit number 3 is research. So if you're studying or working, you may not have much time to conduct the research that's required before buying and selling investments. So what's often the case, especially with large funds management companies, is that they tend to have large research teams that work full-time to do exactly this. So really, if you pick managed investments, more of the research you need to do is around which funds management companies have a good track record and which asset classes you want to diversify across. A fourth benefit to make note of is that Australia has a well-developed funds management industry with more than 200 companies providing such services. The implication is that an average investor will have a lot of choice of funds to pick from. This competition also means that providers are constantly trying to keep their annual fees low. And there you go. Those are some interesting benefits and perhaps some reasons as to why managed investments are convenient solutions.